Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is July 10th, 2019, and I thought I'd take a look at the S&P 500. The ETF is SPY. The reason I'm looking at that, even though we're up near new highs, everything looks really cool, we're in a trading range, obviously, and a little bit of consolidation if you really look at it over the last couple of trading days. Now, the trends are obviously still to the upside. The technicals look good. The systems are actually long. But what I want to do is at least point out that we've broken above this support level. I know it's, let me just bring this down a little bit. This is the, this was resistance, now it's support. And if we take a look at that specific number, 2957.83, call it 2958. So obviously we're close to it, but at least we're above it right now. So that's the key, and just in case the market does reverse a little bit. Now, in hitting up against this resistance level and then finally breaking above, the indicators as far as the overbought, oversold type of indicators are closer to overbought than they are oversold. But as we speak right now, they're not really in overbought territory. So that leads me to believe that there's still potentially a little more upside potential. There is some foreshadowing here with the wave level having triggered recently, but I think that just because we got a millennial type number with 3,000, I think there's going to be a lot of interest in that particular number that will probably toy around with that for a little period of time. Now, if we look at some of the weekly charts, you can see that having broken above that particular support level, and we're now obviously above that right now, that resistance level, it's now acting as support. But what I wanted to point out is on the elastic level, it too on a weekly bar basis is not really in overbought territory. It's close to it, but it's not in an extreme level having gotten into to that particular level. So that's good news for essentially what our systems are looking at. But on a daily bar basis, if you look at our pro alerts, we did have a pulse high that did trigger. So it is telling us that the market theoretically could have some type of reversal, but I think that we'll have to see some other pro alerts really start to pop up here for me to feel uncomfortable and having the market to actually reverse course. Now, I mentioned that we're in a consolidation period. So if ever you're interested, what you can always do is come to charts, energy level, and you'll come up with this particular chart, which will list all of the different markets we look at. And those that are at the bottom of the list, in this case the S&P and the Russell, and the 10-year notes, and lumber is obviously kind of an outlier here, not a market we normally look at. But here's the S&P 500, and it's definitely in a consolidation phase, and this really doesn't have, it doesn't really occur all that frequently. So when it does, it's something that we actually want to really follow suit and take note of. So if we actually take a look at back to a daily bar basis, you can see the consolidation that had been going on here for a period of time. Once we broke above that resistance level, we've been hitting support and hitting support and hitting support, and during that period of time, despite tonight's or today's particular level, we're still looking at a little consolidation period. So we've got some pent-up energy that can go with the consolidation to the upside or to the downside. It doesn't really tell us direction, but what does tell us direction is the systems. And the systems for right now, according to the equity markets, is that we're long the S&P and we're flat the Russell and we're long the Dow Jones. Got a nice open position profit here in the S&P 500 with 4 systems having triggered, but they can reverse course. So the key here is always watch the systems. Everything we do with the deep dive is just kind of giving an overall perspective of what kind of an environment are we in, but the systems are the ones that we really should be looking at. So do watch the systems because they can do an about face very quickly if necessary. I'll end here since we're talking about the S&P 500. If you're ever looking for markets that you may want to look for some correlations, specifically dynamic rolling correlations. I'm not going to get into it tonight, but what I've done here is this. If you come to charts, correlation studies, weekly correlation studies, what you can do is you can come to the S&P 500. You see how it's a little bit more bold than some of the others. I've opened this one up just because I had some people that were asking a lot of questions about the S&P 500 and correlations and things of that nature, that if you're a subscriber, you can get into all of them. But if you're not a subscriber and you're interested, you can just simply pull up the S&P 500, and I've opened this up for everybody so that you can really see specifically what we're talking about here. So if you ever want to look at any particular market, in this case the currencies right here, and obviously we have more markets all the way down the list, but if ever you want to look at the S&P versus the euro, what we have is a dynamic correlation. There's a little bit of right up towards the top end there, but it'll tell you, if there's consistency in the correlation, what is a dynamic high or low correlation. That's what the green and the blue levels represent, and gives you an idea as to what's considered to be high or low historically. So if you're looking for a market to trade because of where the S&P 500 is, and looking at least initially to correlate and have a little non-correlation within your portfolio. In other words, look for some other markets that you might want to trade. You might want to take a look at at least the weekly or the monthlies, but I've opened up the weeklies so that you can at least get a feel for what's taking place. And there's guidelines here, and there are specific markets that we could look at that would tell you which ones you do or do not want to be looking at as far as long-term non-correlated markets. The ones that are non-correlated are far better than those that are highly correlated. I'll leave that for another presentation. I will be doing some presentations here in the near term, starting officially next week. And what you can do is you can, if you're interested in signing up for some of the workshops, you come to, in this case, let's see, where is it? Signals. Where is it? Membership. Oh, upcoming webinars. So webinars and then upcoming webinars. Click on that, and then you'll have access to the first in a long series of about 14 webinars that I'm going to be doing. And so you can sign up specifically for this first one, and each one of these will lead into the next and the next and the next. So there's going to be 14 of them over the course of the next, well, obviously extended period of time on Wednesdays at 11 o'clock Eastern Standard Time. They're only 30 minutes long, but they'll get into a particular topic, not overwhelm you with too much information, get into the particulars, show some examples, take some Q&A, some questions, and put ourselves in a position that you can really grasp some of the things that I talk about here in the normal deep dive, along with some of the other tools that we've actually added to the site, and really start to give people a flavor for what's taking place. So with that being the case, keep watch on your S&P systems, actually that are long right now, but with the 3,000 level in the S&P 500, that's going to act as a magnet. Once we get to that level, at least on a closing bar basis, then you never know what's going to take place, and this little sideways consolidation can pop up here with some explosive moves here sooner rather than later, hence the reason you want to watch the systems. So with that, thanks very much, and we will look at another market tomorrow. Bye-bye.